Tesla is America's most profitable auto company. Despite this, Tesla is often mentioned in the media for anything but their financial success. This video aims to take an objective look at Tesla's financial results compared to those of GM and Ford, and provide a rational perspective on the company's success. Unrecognized profits. Tesla is the most profitable auto company in America in 2022. Tesla had a net income of $12.6 billion, outpacing GM's $9.9 billion and Ford's $2.2 billion loss. However, this success is often overlooked in the media, which has turned even more critical of Elon Musk, the CEO of Tesla, for his recent controversies. This criticism has extended to Tesla as well. This biased coverage creates an opportunity for investors to benefit from negative sentiment and capitalize on the stock's extreme volatility. Despite being a polarizing company, Tesla's current earnings and financials warrant a closer examination and comparison to its American competitors, Ford and GM. It is not uncommon to see inaccurate and outdated information stated about Tesla. By reviewing the latest financials from the investor portal, we can gain a more accurate and objective understanding of Tesla's success. Contextualizing Tesla's earnings. Starting at net income, Tesla reported $12.6 billion in net income in 2022. This surpassed GM's $9.9 billion and Ford's $2.2 billion loss. However, the slide decks of the traditional automakers are more focused on adjusted earnings before income and tax, EBIT, as a performance indicator. Net income figures are something that you have to dig through the slide deck for. Looking at the adjusted EBIT that these companies are focused on instead, this requires an adjustment for Tesla, as Tesla does not state this figure. Tesla utilizes adjusted EBITDA, and that stands at $19.1 billion. It needs to be adjusted to EBIT. Factoring back in the $3.7 billion expense of depreciation and amortization, we arrive at a $15.4 billion figure. This still bests GM's $14.5 billion and Ford's $10.4 billion. One could also factor in Tesla's stock-based compensation. But then, to be fair, we would also have to account for similar adjustments from Ford and GM, and it does not change the overall standings. Due to the focus of traditional automakers on EBIT and not net income, I will focus on EBIT margins instead. Tesla's margin compared to GM's 9.2% and Ford's 6.6%. Heading to the top line numbers, Tesla's high margins allow the company to drive record profits with far less revenue than its competitors. To achieve these record EBIT and net income numbers, Tesla had $81.5 billion of revenue compared to Ford's $158.1 billion and GM's $156.7 billion. These companies are truly differentiated by their efficiency. Tesla reigns supreme in this respect. Looking at Tesla's 12 months of growth, we can see this company is still growing at an extremely high growth rate. We still get narratives of a Tesla bankruptcy, yet we can juxtapose the increasing cash flow with minimal debt on the balance sheet. This is in comparison to the large debt loads GM and Ford hold in their automotive and credit segments. If Tesla is going to go bankrupt with only $5 billion of long-term debt, then GM and Ford will also be in trouble with their massive debt loads. A quick side note before I get comments asking why I didn't include the parent company of Dodge in this video. The parent company of Dodge, Fiat Chrysler, merged with Peugeot to create Stellantis. Now, The majority of the company's sales and employees are in Europe. Thus, I did not include it in my comparison. And of course, it might break my narrative for this video if its earnings beat Tesla for 2022. Hence, I didn't include it. Cool? Now let's continue. Mistakes made when analyzing Tesla. Elon Musk's polarizing personality often leads people to form opinions and then look for facts to support them, rather than evaluating all the available information objectively. One common mistake made by the media and the public is using outdated information. This can occur when people use Google to search for statistics instead of using the latest earnings from the investor portal. Another mistake is misinterpretation of statements made by Elon Musk without proper context. Finally, some people hold on to old narratives even when new information is available. For an example of quoting outdated information, a recent video by Upper Echelon quotes Tesla vehicles as having 300K sales per year for 2021, which is an outdated statistic. This is minor for his video as he is talking about lithium, but a more updated statistic can easily be pulled from the investor portal rather than utilizing the statistics found from Google. This is again a minor instance, but I notice this often when talking about Tesla. This is just the easiest instance I can remember for the purposes of this video. I would say more egregious are videos like this one by Moon. This is supposed to be explaining Tesla's stock drop, but yet utilizes no financial information from any report of any automaker. I see these types of commentary about Tesla far more often that seem to be pushing a vendetta more about Elon Musk himself as a polarizing person and never once discussing the financial performance of the company. One should be very careful about commentary on companies that do not show any financials or slide decks found on the investor portal. Additionally, some financial commentators view Tesla as a sign of irrational exuberance due to their belief that the company has no cash flow. This is shown in this clip here as Jim Bianco rails against Tesla as a stock similar to the meme stocks that led 2021's rally.
This is 2021 all over again. Half the gain, the stock market's up about 7.5% this year, and it's only February 1st. Half the gain is 8 stocks. It's the FANG stocks plus NVIDIA, Tesla, and Microsoft. I mean, that's 2021 stuff all over again. That you're seeing the crypto space start to move, and the shittier the coin, the better it's doing. Like look at how much Solana is up relative to how much. Yes, and I am saying the shittier the coin, the better it's doing relative to Bitcoin or Ethereum. So this is 2021 all over again. So you've got all the races. Look how much ARK is up. ARK, I think, had either its second or first best month ever in January. Tesla was up 40%. Coinbase was up 65% in the month of January alone. This is not the Caterpillars and the GMs and the Procter and Gambles powering ahead because we're going to have a soft landing. This is, like I said, monkey JPEGs and everything else is starting to move. This
is incorrect, as Tesla does have cash flow that has been growing at a rate of around 50% annualized. While this high level of growth may not last forever, lumping Tesla in with other companies that are not producing any cash flow is incorrect. Tesla's stock price swings are related to the market's perception of its growth and discount rate. If the market believes the growth rate will be 35% versus 45%, for example, it can lead to significant swings in market valuation. Shown here in my own Excel model of a random company, if we change the growth rate by 10% or more, the valuation of the company drastically changes. The market is thus voting on what Tesla's future growth will be. Speaking about 50% annualized growth, the media has often criticized Tesla when this figure is not hit. Yet this expectation is misconstruing Elon's intended meaning when he promised such growth. Elon Musk has stated that Tesla targets 50% annualized growth. The media often misconstrues this goal by using quarters with lower than 50% growth rates to suggest that Tesla's growth is slowing. However, Elon Musk had intended this to mean from 2020 and not to reset with each quarter. This slide from Tesla's 2022 slide deck puts things into context by showing the company's goal of 50% annualized growth from 2020 is still on track. Tesla is projected to deliver at least 1.6 million cars in 2023, which is approximately 25% above the reported deliveries of the previous year. This is still amazing growth if they only hit their target, but I suspect Tesla will continue to outperform the 50% annualized growth rate since 2020 metric. Finally, it is a common narrative that Tesla's price cuts will destroy its margins. This is a narrative we hear anytime Tesla announces a price cut or a cheaper vehicle. But it is not necessarily true that lower average selling prices hurt Tesla's margins. This page from Tesla's slide deck shows that despite the average selling price of their vehicles dropping each year, the company has been able to increase its operational efficiency, dispelling the notion that its margins must fall with lower prices. Conclusion. In conclusion, the average commentator on Tesla often does not keep up with the company's fast changes, leading to outdated beliefs about its financial status. There are actually still people who write about Tesla going bankrupt, despite the company's balance sheet only having $5 billion of debt, compared to GM and Ford's large debt loads. However, this presents an opportunity, as Tesla's value can fluctuate wildly at any time due to things unrelated to the company's underlying fundamentals. A thorough valuation of Tesla requires a dedicated analysis that this video does not have time to dive into. However, it is best to look at Tesla during Elon Musk scandals, as these often drive the price-to-earnings ratio down, presenting a good buying opportunity given the company's 50% year-over-year free cash flow growth. A price-to-earning ratio of 40 or lower represents a good opportunity. Given a 30% growth rate, something Tesla has surpassed easily, this represents a 2-year forward price-to-earnings ratio of 24. Utilizing 50%, we get 18. For a premier company like Tesla, I currently believe these represent good values. While speaking about growth, we can also discuss demand. There have been constant questions regarding Tesla's demand, claiming the growth must end here. One must look at the full market though, and Four Wheel Trader has done a great video on the state of the automotive market. The key takeaway from his video is that car prices are beginning to normalize as automakers catch up to demand. However, this graph here shows there is still a 1.5 million deficit in the normal supply of cars for sale, and this graph here shows cars are sitting on lots for 60 days compared to the normal 80 days. This gives Tesla the necessary room for growth. While this video focused on contextualizing Tesla, it does not mean that other companies like GM and Ford are bad, as I have immense respect for both of these companies and love their vehicles. I believe that gas, hybrid, and electric vehicles will coexist for a long time, and the discussion of transitioning to electric vehicles is more nuanced than what is often portrayed. Mazda's latest engine delivers MPG in excess of 50 as a pure combustion engine. This massive efficiency gain puts the engine in the same realm as a current brand new hybrid Honda Accord. With such innovation still possible, the electric vehicle transition is not a given. This vehicle is still not available in America, and I am curious as to why. I intend to go into a further detailed bear case on the electric vehicle as I gather more information on this improvement and compile the information I have found questioning the feasibility of the electric vehicle transition. I hope this video was able to give you some perspective on Tesla's current financial status and the misconceptions around the stock. Tesla can seem overvalued if you only listen to financial pundits, but when you put the current earnings in perspective, you can decide for yourself how high of a multiple is justified and why investors might pay a high multiple for a growth company. The end value of Tesla will depend on the growth ceiling and profitability of the company, as well as the success of the company's numerous other endeavors. That's all for now. Bye.